ago.
Gosh.
All right, let's move on now. Let's begin with the State of the Union. The president expected to propose, among other things, a 21% minimum tax on corporations and a quadrupling of the tax on corporate buybacks. Bob Pisani joins us now from the NYSE. You've followed buybacks for years. What would the practical impact of what the president's proposing be?
It likely wouldn't change things too much, Tyler. Corporate America is flush with cash, and they're buying back a near record amount of stock this year. That's good news. President Biden wants to increase the taxes on those buybacks. He's reportedly going to propose an increase in the buyback tax from 1% to 4%. So the theory is that imposing additional taxes on buybacks might encourage companies to invest in hiring more people or capital expenditures. While the validity of that theory is debatable, there's no doubt corporate America appears to be embarking on a buyback spree. February had the second strongest month ever for announced buybacks. 2024 looks to be a near record year. That's according to Goldman Sachs. Corporate America has wide latitude on what it does with the cash flow that's generated, but it typically falls into three buckets: buybacks, dividends, and capital expenditures. While the percentage that goes to each bucket ebbs and flows, corporate America has recently shown a greater penchant for buybacks. And the reason is buybacks are immediate gratification for the shareholders because, in theory, it should reduce shares outstanding and improve earnings per share. What causes companies to spend more on one bucket over another? Well, if you're a big tech company investing in AI, technological growth will cause you to invest more in capital expenditures and less in dividends and buybacks. But for most companies, it's really about economic growth. Higher growth means more money to hire more people. Slower growth likely means diverting available cash to buybacks and dividends. Now, would higher taxes really discourage buybacks and divert spending to more hiring? In early February, Meta authorized an expanded $50 billion share buyback program. That's equivalent at that time to about 5% of its shares outstanding. Under the current tax, the company would pay $500 million. Under Biden's tax, the proposed one, it would rise to $2 billion. Now, that's a lot of money, but it's not clear if it would cause Meta to divert money from buybacks to capital investment and hiring people. The bottom line here, guys, it's economic growth that encourages companies to hire.